Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, September 29th, 2014. And this is brought to you by Triton Wave Consulting, home of the Triton Waves. The Triton Waves are early warning, market timing indicators used in all time frames in all markets worldwide. All right, so let's look at gold. I have my page open to gold. So in the past, I've been watching this go between, again, for those of you who haven't seen this or are unfamiliar with it, this is the minor Triton wave, and this light purple one is the major one. And it's been bouncing between the two of them, this up to the 144, and this down to the major, and a little bit beyond that, back up to almost the exact minor wave here. And then as this gets narrower and narrower, it's the passages are narrower and narrower, and then it broke sometime in the beginning of September. Okay, so what I'm looking at for this is this line of bottoms between June 27th, 2013, and another matching bottom on the end of December 2013, 2013, yeah. And so I am looking right now for 1177, which is right here. 1177 and 1177. So right now we're trading at 12, I believe that's 1220. Let me just make sure here. We're trading at 1220 exactly. That was the close on Friday. So I expect it to zigzag and make its way down there, especially since the 21 has crossed the major Triton wave. 55, these are all expanding. The 21 crossed the 55, crossed the 89, crossed the 144, and they're all moving down. The lines are expanding. The gap between the lines are expanding, and we may see some moves. We may see a move back up to 1239, which is a shorting opportunity. It would be a small miracle if it actually moved back up to 1263. Any close above 1263 is a new ball game to the upside. I personally don't see that happening, but you can either take a long-term position in this on the downside, or you can just play these little tiny moves in here, which don't look like small. It's hard to tell when the graph is all crimped up like that, so that's why I go to a 987 tick chart and a 233 tick chart. And they're small moves, but they can be profitable. And the same thing happens. Let me just move this, expand this a little bit here. So on the considering that everybody likes to make day trades, these are nice long. On the 233, sometimes you can ignore it and sometimes you shouldn't ignore it. But since when they start blipping above and below zero, you want to ignore that. But these nice longer waves right here takes you from about 12, 12, 12 before, like at 7 o'clock in the morning, all the way up through here when it quits and goes below zero on T2. So this is to refresh. This is T1, this is T2, this is T3, and these T4, and they all stand for Triton waves. Okay, so between 12, let's call that 1212, and this is about 1225. It's like a 20-hour move, and it's 13 points. It's not a big deal to some people. I get calls from people that say, I only want to see 20-point moves. So I go to a bigger chart. Let's bring up the 987 here. And let's bring this back a little bit. All right, that's not going to work. Let's bring up the 55. Okay, the 55, for those who want longer moves, let's see, it's going to take a minute to populate. Is that a good chart there? Let me see here. Okay, so when it came down, this may not be the best time frame, but I'm looking at the longer waves here on T4 when this came down, when the minor crossed the major and it jumbled around, and then basically the main key was that the T4 crossed below zero. And I always look for something to happen. So I'm always looking for, if this is going sideways, then it's not time yet. If this is going above zero, then it's not time yet. But this is an indication that heads up, it might be happening. And just right in here, you can catch this, even on a smaller time frame chart, you can catch that maybe like five or 6 points down. And you've gotten, let me see how many points that was. That was between 1289, and then you can either write it down to the bottom here at 1240, or wait till on a smaller time frame chart it comes up. So let's look at the 21 just to see what this looks like here on the 21, at that same point. Okay, looking back at smaller time frames like the 13, you probably, unless you had a position overnight, you probably wouldn't be getting in until 1276, but you could ride it all the way down until one of these waves in T1 made it above zero. And then to confirm, then you ride it back above when T2 is above zero right here. So the jump ahead to the positive side, wait for a little retracement, and then as long as this keeps moving up and T4 is moving up, you can just keep on riding this, or you can ignore the smaller waves and just ride the longer waves, and you catch this nice little move up here until all the way into here on T4, T3 when it goes below zero. All right, so let's look and see what's going on absolutely at this minute. And at this minute, let's look at T3, which is back in the second week of August, third week in August, about 8:19, right in here, when this went below zero, right about here, and it went. So we're tracking that at about 1290. So first of all, it's below 1300. So that's a warning sign. Now, the lines are all crossed. The 21 is in alignment. The 21 is on the bottom, then the 55, 89, 144, and they're all expanding to the downside. And then you get this drop. Now, you can take, whoops, let me get an arrow here. You can take this little bit right here and take your profits, and then wait until it gets back in here when this goes below zero, or you can ride it out on the strength of this being below zero the entire time. Your choice. You're going to give back a little bit if you get out, but really it's a good idea to get half out when these smaller waves go above zero, because you don't know, and to move your stops down, because you really don't know if it's going to retrace all the way back here. It's not, if you had a crystal ball, you would know, but this is not a crystal ball analysis. But the fact that this goes below zero and then this goes below zero and stays there brings you all the way down here, which is like a tremendous move, and you don't have to watch it every minute. And you're in at about, where were we? All the way back here at about 1295. And as long as T3 is below zero, you're good until right about here. So that's like 12.19, 12.20. And we're at 12.20 right now. So this looks like it wants to move a little bit to the upside. My long-term look is down, but right now I wouldn't take a position to the downside until this gave us an opportunity. This is like this again, this is a 13-minute chart. So this looks like it wants to make a short swift climb to 12.28, which is not, not a big deal, but now there are better entry points than right now, unless you want to dollar cost your average and just get in as it goes up and then just take longer positions when it comes back down again. Okay, moving on to the S&Ps. This is the ES, continuous contract of the ES. This is a line in, let me see if I can draw out this all the way. All right, since November of 2011, this has stayed above, or 12/2011, this has stayed above the minor Triton wave, and every time it moves up, let me get an arrow here. Every time it moves up and retraces, it retraces back to the minor wave. Moves up, retraces back to the minor wave. Now, when it takes off in November of 2012, it moves up and only retraces to the 144. And you can see this is only to the 89, 144, 144, 144. These are all minor retracements, but when they're happening, you think your head's being snapped off. And then comes down to here, and then it always manages to make a new high, and it's been doing that for almost 3 years now. So we had this major stair step down. Now there was an indication on T1 when these started to go below zero that there was something amiss here, because these higher highs on the futures were not correlating with higher highs on the waves. In fact, they were correlating with lower highs in the waves. So that's an indication that something was up. So I was recommending shorts right in here, and so far, excuse me, so far it's paid off. You can see that we had 3 days down, then a retracement right back up to the 21, then a reversal, and then a 50% retracement right into the 55 exponential moving average. This candle right here had tremendous, I don't have a volume chart up, but this candle was tremendous volume. This candle on the upside retracement last Friday was a very small volume by comparison. Okay, this is a look at the waves using the 144 and 144 minute. It's not a daytime cash price. It's a 24-hour chart. There's actually 144 minutes around the clock, but you can see that this drop below zero here. A little bit ahead of this anticipation, so you need wider stops if you want to catch this. And then, of course, this reversal right here. Unless you trailed your stops, then you gave back about a third. But this was a nice move from here to here, and that move from up here, and then this move down, followed by T2, followed by T3, and actually T4 moved below zero before T3 did, which just happened in the last 4 or 5 hash marks. So big picture is I'm looking for a maybe a little rise in the morning on Monday, but a continuation of the downside. And if we look at a smaller time frame chart, this looks like these are only 3 hash marks a day, or 5 hash marks a day. Um, but even these little moves from here to here, which look insignificant on a 144 chart, um, on a 55-minute chart, you can see they show up as bigger moves. And in a 13-minute chart, they're even more clear. What I like to do is I watch, like for moves during the daytime. Okay, so this took place on Thursday. Um, this is on Thursday. Okay, so this was like uh, the big move up, and this is the big move down on Friday. And you can see, let me see here. All right, so if you start back on, let me see, the beginning of the week, this was a week ago Friday when this went below zero. And we had this move for 3 days, 4 days. Then T1 moves above zero. Heads up, get out. Because it's always going to retrace to either usually the minor wave, and even on the smaller time frame charts like the 13. So this moves up to the major wave right here that seems to be like coasting right through everything. You can see it like coasting through, much smaller movement than the minor wave, and almost the exact same position as the minor wave. I mean, almost to the tick. So that's a signal to me of extreme resistance, because these are very, very long calculated lines, whatever time frame you're in. And so this is a signal, even though the wave is rising here and rising here, this is a signal to me to get out. Just period, get out. Not even half your position, just get out. Because usually it's going to retrace, and the wave will tell you if it's going to break through or not. In this case, the wave just went down right here and got you actually on a smaller time frame chart. You can actually get in on a tick chart right after the actually this is probably like 3 or 4 o'clock in the morning if you're watching it, and this gets you this huge drop here, sideways movement, and then again in the middle of the night it gets you to close out this down position. And if you want a retracement rally, you can follow this up. So this right now, even though T1, T4, and T3 is below zero, T2 is just, like minorly poking its head up. And so we may see, like an opening rally. Right now, I'm doing this on Sunday afternoon, so the opening bell has not rung yet for 5 o'clock Central Time. So on a smaller time frame chart, looking at the 233 tick chart, you can see a move above zero at 10 o'clock in the morning on Friday, and that was right about in here. And it moved up to resistance, which is the minor and major wave neck and neck, and then crossing to the upside while this is still above. T2 crosses above zero, T3, and then T4. There's no reason to get out of this. All these lines are separated, nothing's crossing each other until we get up to here. That's a warning flag that something may be about to happen, and it may come down and try to hit the minor wave, and you see that the waves start coming down again. That's a signal to get out of your position from the long side, and as long as this keeps going up, you don't want to short it yet. It did come down to the minor wave and just hovered there for about an hour before the close. Now this is above zero, but these three are strongly below. These two are strongly below the third one. So I have no idea where this is going to open up. It may just try to come back to 1969, or it may shoot up like it wanted to on the 13-minute chart. Overall picture, I think, is down. Timing it depends on what these waves say. So it's we don't know right now until the opening. All right, looking at Amazon, since I'm looking for a downward move on the S&Ps, that includes the Dow, that includes the SPYs, and even though the Nasdaq is a little bit stronger, I like looking for stocks on the downside, and my choices right here are Amazon, because T1 is below zero on two-thirds of the waves. This actually, I forgot to tell you, this is the yellow wave is a new wave that I've added just for a little bit closer timing for entries and exits. Sometimes on the larger time frame, sometimes on the smaller time frame. So if you ignore the yellow, because this is daily, sometimes I just ignore it. Just the white and the purple down below zero. T2 down below zero. T3, T4 is moving down almost on a daily basis, and this is wedged in between this group of EMAs right in here, this cluster right here. This is also opening. Let me get a bigger picture here, widen this out, expand this. Okay, now you can see the order changed when the 21 went above and then below and everything else crossed. So these now are in order on the downside. You can see that this closed, that this, let me get this back here, that this bounced off of on the daily chart on Amazon, this bounced off the minor Triton wave, and then it may bounce around a little bit here. This is what I'm looking for. The major Triton wave is all the way down here. I don't expect it to come down here. If it does, it would have to be like an incredible move in the market. But right now, I'm looking for this because in the smaller time frame charts, this looks this minor Triton wave looks vulnerable. On the daily, it looks strong, but on smaller time frame charts, it looks vulnerable. So this move right here down into about that area is like 305. That's what I'm looking for immediately on Amazon. We can look at the 55 on this, and you can see that it's already broken down, and the EMAs are also expanding to the downside. It's broken down through the major and the minor, and the major and the minor actually cross to the downside. And T1, T2, T3 is below zero. If we look at the 13, a little mishmash up here, but you can see the major and the minor crossed, and every time it comes back up, it comes into that resistance. Again, it comes up to that resistance, and then it falls back down again. So I think I have this on a smaller time frame, like 377. You know, unless you're playing options on a daily basis, you know, to go in and out, it's probably not a good idea to play these. Let me see if I can get this on a 610. I guess you could play these if you looked at them on like a 144. Okay, so here's some valid plays on a 144. This happens right at the opening at 8:34 in the morning at $328 on Amazon. And this happened 2 days ago, 328, and it crossed down here on T1, T2 follows, T3 follows, and you can take any one of these and either cut half of it loose or cut it all loose when these go above zero. So basically, what was the price that we said? 327 down to this full extension to the when T2 goes above zero. It's 320. That's a nice option. That's a nice option move. Okay, looking at Tesla. Tesla's moved down to the 89 EMA. It looks like it's been in a downtrend even before the market started in a downtrend. So it was a market leader to the upside. Now it looks like a market leader to the downside. This is descending right here on T1. Believe it or not, these waves are so long timed that this is since Tesla had its IPO on June of 2010. Um, that's all the data that I get. So to give you an idea of that, when these actually cross, they are very, very important. So let's look at Tesla on a 144. Uh, it crossed it crossed right in here on 918 and had that big move right after that, 265 down to 245. On a 55-minute chart, let's see here. What do we got? Okay, when the market was, you can see these moves. When the market was moving down on 7.2, it moved down to the minor Triton wave. When it moved back up again, it was above the Triton wave. It was above the minor Triton wave, and all these, you can see these. All the EMAs are starting to expand to the upside, as well as this moving up, and you can see even on a slow moving chart. Um, T2 goes above zero, T3 is above zero, and T4 moves above zero. And so in an up moving market, that was a beautiful play from July 25th at 222 until it quit on T1, resumed again here, got you up to here, and got you out at 281 to the downside. So I'm looking for Tesla to, it looks, if you look at this, let me get a few more data points in here. All right, so this is the minor wave, this is the major wave. It looks like it wants to come back down. I'm looking for Tesla to hit 213, 213.67. Now the fraction may change a little bit because the wave is going to move, but that brings us right into where the launch was from the previous move, and it also happens to coincide with where the minor wave was, right in here, and that the way this major wave is probably going to move up slightly before it happens. As just on a daily move, because it's slow moving, it probably move up just a little bit, even though this is moving down. But that's what I'm looking. I'm looking for 220 on Tesla. Okay, we covered gold. Hang on. Okay, that's all I have for tonight. Just as a reminder, this is Triton Wave Consulting, and I do timing for gold and ES for private clients. If you want to get in touch with me, I am Rodney Julian at tritonwaveguy@gmail.com, and this is a blurb about my gold offer, which is also good for the ES. So have a great day, have a great evening, have a great week trading, and this is the volatility has come back in the market, so there'll be a lot more volume, there'll be a lot more sharper declines, sharper kickback. So sharpen your tools and have great fun. This is every trader's dream come true. Have a good evening.